Hey, yo, Henry and Jeff Show. I'm Jeff Nelson, the co-founder and chief operating officer of Blavity. And who are you?
Henry Mason, CEO, founder of Precious Healthcare, Precious Hospice. We do home care and hospice, Atlanta, Chicago, and Crown Point, Indiana. Thanks for coming. We're glad for another episode.
Always.
This one is super important because I wanted to touch on a question that I get a lot,
Okay.
which is like where we are today, 2022, May. You live in the U.S. What's going on, right?
Mm-hmm.
People are, should you buy a home? Should you buy stocks? Are you looking into the bond market? Wearable assets, crypto, NFTs, like what should you be doing? And the reason why I think people are asking is because I think we're in a space where they're looking like, are we going back to 2008?
Okay.
Are we facing a depression? Are we going to see the worst of all time? Like no one really knows. And so my response to people, and we want to get your take, I would never buy anything at the top.
Facts.
I think a lot of this stuff that we're seeing, real estate, no matter what you believe is causing it to go up, right? Because I hear people in private equity say their companies are buying up so many homes, forcing the prices up on these homes, making them rental properties. It doesn't matter whatever you believe. You can believe whatever you want, right? But it's like, no matter what the cause is, you should not be purchasing things while it's at the top. There's a caveat to that, right? For instance, if you're buying your forever home and you're gonna be in there in 30 years, the way the market works, in 30 years, at some point it should still go up, right? So that would be the only thing I would say where it's adverse to that. But right now, I think people should be stashing cash, as much cash as humanly possible. Like when I say I have not bought anything that is not directly related to business, I have not purchased anything that is not directly related to business. And I love clothes, I love shoes, none of it. Like I only right now am focusing on profits and reinvesting those profits into businesses, into different verticals that we have so that we can be ready for what's coming next. But we're not actively, like I'm not actively going out and buying things with what I would call disposable income because I look at that as an investment. Even things like crypto. Like I look at the Bitcoin and being around $25,000 when we've been at a high of 65-ish, I have to say to myself, okay, what am I going to do with that? Like, what does that look like for me in the future? And why am I buying it, right? Is it a short-term flip? Is it something that I want to use for forever? Is it something I want to pass down to my son? I look at crypto as a long-term investment. I hate to call it a gamble, but without it being regulated for right now, it's somewhat of a gamble for me, right? Unlike with stock market, there's just certain things that are in place where you can't make decisions. Like I look at like Terra Luna and people lost all that money and it's like, okay, you're just out of where that normally wouldn't happen in the stock market. But you can still look at it and say, if it were me right now, I'm taking as much money as I possibly can, even if I have to take 2 jobs, 3 jobs, 4 jobs, and I'm putting all that money up because when we hit rock bottom, you want to be available to buy as much as you possibly can. Like, but what are your thoughts on that? You as a tech guy, what do you think about that?
So I do want to caveat this and say I am not a financial advisor. This is not financial advice.
It's not a disclaimer. I'm not a financial advisor.
Yeah, I'm gonna speak for you too. So I don't want anybody, come in and say that we, right? So this is these are just some thoughts. Again, I'm not a financial advisor.
Right.
Please talk to a certified professional about your financial advice. So and also want to recognize the fact that the vast majority of people are going to be those for whom their investing is long-term and for retirement, right? So I'm assuming most of the people in our audience aren't day traders that aren't looking to flip, right? There may be some people who have disposable income and that's what they're looking to do, but most people are probably looking at the market and they're looking at their 401ks, they're looking at their investment accounts, and if they do invest in crypto, casually, they're looking at that and they're like, man, I'm taking a loss, and they're probably getting nervous. And so, the first thing that I think of is what you've said: don't buy anything at a high, but also don't sell anything at a low.
Don't.
Right?
Yeah.
Now, I'm a huge fan of buying the dip. Right?
Yeah.
I like when we dip, I dip, you dip, we dip. Right?
Dollar cost averaging.
Right, and I'm glad you brought that term up because dollar cost averaging, for those that may not know, it's the notion that you cannot time the market. You don't know when the high is, you don't know when the low is. So the best thing to do is that, let's say if you've got $100 that you want to invest in something, it is not to say this is the low, I'm going to spend 100 on it, or this is the high, I'm going to sell it all. It's the dollar cost average it and say over 10 weeks I'm going to invest $10, and that is on average a better way to get a preferred average price, right? So dollar cost averaging in general is an investment strategy if you are a long-term investor and you believe in what you're investing in. Additionally, just in terms of asset classes, you mentioned a few things like wearables, NFTs and crypto, real estate, stocks. In general, I think that most people should be in the market. That's where they're first, like if that's the only thing you're going to invest in, unless you're going to really pay attention to stuff, it should be in the market, right? And I don't recommend people buy individual stocks.
I agree.
So, you know, I've had so many friends who were like, yo, such and such, they're doing a stock split, are you going to buy it? And I'm just like, why are we talking about individual stocks, right?
Yeah.
Unless you know how to read a balance sheet, unless you understand valuations and multiples and you're on earnings calls, you're relying on either hype or you're relying on information that institutional investors already have had and have already placed the bets. If you don't know about shorting and options and puts and calls and all that stuff,
you're guessing.
Right? You're literally gambling.
Literally guessing. Yeah.
You're gambling. You might as well honestly just go to a casino and get the free drinks while you're on the floor losing your money. Right?
And it's funny because people look at like, well, Warren Buffett has done it, and he gives people these examples, and I'm like, that is a case of where he's like, I want to buy Coca-Cola, and I'm going to buy 15%.
15, not only the size of the investment, but also he has the ability to be long in those positions. And also Warren Buffett is actually studying these companies. He's looking at fundamentals, which people who are like, I've got $1,000 and I'm trying to put it into the market are not doing. So I always recommend people invest in ETFs. Find out what sectors, what broad market trends you believe in. Like if you believe that healthcare is going to do well because of all these things. Like I remember when I was younger and the Affordable Care Act had passed, and I looked at the legislation and I was like, oh, this legislation means that we all have to buy private insurance. So private insurance companies and healthcare, like they're going to make a lot of money. And this was before the bill had actually passed. I was looking at the politics of it. A lot of times if you're into politics and you sort of just know political trends, like when the infrastructure law was just passed, like I knew the politics of it suggested that was going to be a real thing. So industrials were going to stand to gain. So I looked at those broad trends, both economically, but also politically. And I was like, okay, this is a good area to invest in. I don't know if it's going to be Pfizer. I don't know if it's going to be Merck. I don't know who it's going to be. I'm not going to pick an individual stock, but I know that this is an area that's going to do well. So that's my broad, position, is that I think that people should, if you're young, invest long. Don't get scared when the market goes down. Buy the dips and buy some ETFs. That's generally what I think about. Now, if you've got a little more disposable income and you're thinking about, well, what are some other riskier, high risk, high reward things that I can invest in? You've mentioned real estate. The market's at a high right now. I would not buy investment property.
But if you're going to live there,
if you're going to live there,
you have to live somewhere.
Exactly, that's a different thing.
You have to pay to live somewhere.
I am just not as well versed in the wearable space. I mean, you've been trying to get me to buy a Rolex because you say it's like a 20% gain as soon as I buy it.
So I tell everybody, if you can afford it at retail, buy it at retail. If you can't afford, now don't go break the bank trying to buy it. Just like I'm trying to think of one that I got. And this is a different market because it's hard to get stuff and get stuff shipped over here, all those types of things. But I think wearable assets are great because it's like when you buy stocks, you just buy the stock, you go up or down, you don't know. But I don't know if there's a lot of pleasure in that. right? Versus like if you purchase something that will appreciate and you get to wear it, you get to enjoy it, you get to have stories about it or around it, and it's a conversation piece. Like that's more important to me. That's what I like, right? And some people are good for that, some people don't. I'm not saying buy sneakers, but there's a market for that too. Like the market is so wide open right now. You can get into a lot of different stuff.
So I think what you're saying, it relates to the larger theme here. First and foremost, people, you mentioned having liquid cash. People have got to have, one, they should make sure that they have the ability to withstand dips in the market. Like you can't go out and take an emergency fund and say, I'm going to put this all in Bitcoin because I'm trying to
I've
double
seen
it or
that.
triple it,
I've
right?
seen that. I've seen people dump life savings
And you can't do that.
at $50,000,
Right.
and now they're like, half my money's gone.
Exactly.
And now they need it.
That's why you can't play
So now they're out,
short with the investing. And I think generally speaking, whether it's individual stocks, wearables, crypto, if there's something that you have knowledge of and you have conviction of, and there's utility in that thing outside of its growth potential. So if you like, for instance, if you buy, again, the idea of a forever home, if you're buying a home because like the utility is you'll live there.
You'll live there.
If it appreciates, great, but you'll live there. That's the utility.
That's the value.
Right?
Yep.
Then yes, get into those individual things, but don't speculate, right? If you are not somebody that is well informed, then pay for somebody else who is more well informed to make your money grow. Invest in funds, invest in ETFs, invest in things where you can be a little more hands off, play the long game, and you know, don't panic when the market is low, but also don't buy when it's at a high.
And the only thing I will say, I will give out this, for better or for worse, every extra dollar that I would have put into like the stock market right now is directly going into Coinbase.
Okay.
For better or for worse.
So you're buying a lot of crypto.
Well, I believe in crypto.
Right.
The same way I believed in EV, right? And how originally there was only pretty much like Tesla to buy.
Yeah.
And so now on like if you want to get into crypto, but crypto's too much for you, but you want to purchase a company that provides that for you, Coinbase is really your only option right now.
Well, what's interesting is I think it's important to tell people like it's okay to wait, right? So if you are sitting on, let's say, you know, you got $100 and it's burning a hole in your pocket, don't feel the need. It's like, I got this extra $100. I got to go invest in something today. It's okay to sit on the 100 and wait till there's something you believe in.
So I'm different.
Okay.
If you've only got $100, you're broke.
Well, I'm using 100 because I don't want to say amounts, and then people are like, y'all aren't relatable because like you throw
100, say it's 1,000. Doesn't matter, right? If
But
you got $1,000, you need to be going to take a class that gives you a skill where you can go make more money. Like, don't try to make $1,000 into $1 million.
But my point ultimately, like, if you've got whatever amount to you this is an amount where I don't need it to live. It is disposable income, and it is income that I could leverage for more income, whatever that amount is, to you, whether it's 100, whether it's 100,000. I think the point is it's okay to sit on it until you find something that is truly worthy of that investment. You don't have to just be like, I have extra money.
Yeah.
I got to invest it right now.
Right now. I understand that. I understand it. And by the way, we're always relatable because we from Chicago.
I was the relatable CTO, so I am by definition relatable.
From
right?
Southside Chicago, Morgan Park High School. Like,
right.
It doesn't get any more relatable than that. Like,
facts.
Yeah.
Okay. Well, I mean, let's see what this market does. I mean, it's been a crazy year. We've got inflation.
Yeah.
We've got supply chain issues. We've got war. Potentially World War III might be happening, you know.
You got people not wanting to go back to work, but
It's a lot.
which is going to be interesting because as inflation grows and, you know, you look up and you're paying $7 for gas, you know, how are you going to make that?
What's gas? You got to pay for your car. We both got Teslas. What are you talking about?
Yo,
gas?
Nobody knows that.
Nobody knows that. We're more, does that add or take away from relatability, right?
I don't know. It's just like being careful. And then like we talked about this before, it's like where are we going as an economy, right? Because if we get into a place where, and I tell my close friends from Chicago all the time, your kids have to be in tech. And they think I'm crazy.
Yeah.
And I'm like, y'all don't understand, even the small job, where you used to walk into McDonald's and you'd be able to go in there and be a cashier or flip burgers, we're probably 5-10 years out, you don't need a lot of those people.
Yeah.
They've already got kiosks, right? So they've already eliminated the cashier.
Right.
So now they're gonna go and figure out what's next. Can I get somebody to flip these burgers?
Yeah.
So next you're gonna figure out, I got a machine or a robot, which Tesla's coming out with, right? You've got a robot that flips burgers.
Well, if they have
packages it.
robots that do surgery, they can have robots that flip burgers. Facts? Facts, right?
Yeah.
It's a lot of interesting both micro and macroeconomic trends.
Absolutely.
Again, we are not financial advisors. This has not been financial advice. We are just two relatable guys who have $100 or more, in this guy's case, disposable income that we just like to see what we can do with it, right?
Yeah, and give us some feedback. Like I want to see what people are.
I'm interested to know what people are doing. I mean, like, I might just go to the casino after this and
I want to know what Coinbase is today, because I want people to know that I said this, for better or for worse.
Oh, you're talking about the Coinbase stock itself.
the stock itself, for better or for
I ain't
worse.
doing too well right now.
No, it started. I mean, it came out like $400, but for right
You
now,
mind the dip.
for better or for
Okay.
worse, every extra dollar I have, if you believe in Bitcoin, you can go buy Bitcoin.
Right.
But I'd rather buy the
Platform that's facilitating it.
that's going to make money whether people buy or sell it.
And that's the old adage of is the people that got rich during the gold rush for the people selling
Are you
shovels,
buying
right?
shovels?
Right?
There you go.
That's that play, right? So I think that's an interesting principle to live by. I feel you, bro. I feel you.
Matter of fact, I think I should even do a live thing. Like maybe I'll do that, right?
A live-
I'll actually post like, hey, I purchased this much on this day,
Uh-huh.
and we'll just keep showing it every few months or so.
You gonna have people out here pocket watching you? Next time I see you, I know if dinner's on you or not. I'm gonna already know. I already know how much you made off that Coinbase stock. I already know.
I think it's good for people to see the in real time though, right? Like it's like, okay, no, I'm saying it, but I'm actually doing. Like a lot of people say stuff, but it's like I don't actually see you doing it.
So you saying no cap? Period. No cap.
Not for me.
All right. This is Henry No Cap Mason.
For better or for worse,
Hey.
yeah. And if I lose it, yeah, it's gone. I'm not gonna lose it, right? I'm
Right.
pretty confident, but
Okay.
yeah, for better or
Okay.
for worse. 5 years.
Hey, you know what? I think this is gonna be a continual conversation that we
Yeah.
have, man. It's just like it's always good for us to check in about what's going on in the market, because in addition to us focusing in on our companies and our businesses, we gotta, we also gotta diversify, right? We can't just be all in on ourselves. We gotta diversify. So I appreciate the perspective. Interested to know what y'all think. So leave us some
Absolutely.
comments, leave us some feedback, and let's all get this money together.
Let's get
do
it. Let's get it. Peace.
Boom, boom. Peace out.